Have you ever wondered how some companies don't just grow, but practically, well, explode with success, even in tricky markets?
Yeah, and how they manage that kind of really rapid transformation while, still thinking long term.
Exactly. Today, we're taking a deep dive into InfoBeans Technologies Ltd. They're an AI-led software engineering company, and they just released their financial results for the first quarter of fiscal 26. That's the quarter ending June 30, 2025.
Right, some pretty eye-catching numbers in there.
Absolutely. So our mission here is simple. We're going to unpack their latest announcements, everything from surging profits to their big strategic plays. We want to give you a clear, concise picture of what's happening and maybe more importantly, why it matters to you.
And this is all based directly on their official press releases, their investor documents, solid sources.
That's right. Okay, let's unpack this then because, well, InfoBeans is definitely making some serious waves. Let's jump straight into the big numbers, the headline figures from their latest report. For the quarter ending June 30, 2025, InfoBeans profits surged by a remarkable 200% year over year.
200%. That's massive growth.
It really is, not a typo. And their revenue, a significant 23% year over year surge. Also very strong.
Still very healthy growth on the top line, yeah.
And their EBITDA, earnings before interest, taxes, depreciation, and amortization, that key operational profit measure, it saw an 89% boost in margins compared to the same time last year. That's going from 19 crores in June 24 up to 30 crores in June 25.
Okay, and that 30 crore figure, we should note, excludes a specific credit, right? We'll probably get into
Yes,
it.
we'll touch on that nuance.
Yeah.
But even excluding it, that's a huge jump.
Yeah.
And their profit after tax, the PAT margins,
Yeah.
a remarkable 200% leap year over year, from 8 crores to 24 crores.
Wow. So the bottom line grew even faster than the operational profit percentage-wise.
Precisely. And it's not just the year over year picture. The quarter over quarter growth is really strong too, sequentially.
Okay. How does that look?
Revenue increased 15% quarter over quarter. That's from 107 crores last quarter, March 25, to 124 crores this quarter.
Solid sequential top-line growth, too.
Definitely. EBITDA boosted 48% quarter over quarter from 23 crores to that 30 crores figure, again, excluding the credit.
Nearly 50% jump, quarter on quarter in EBITDA. That's efficiency kicking in.
It has to be. And Pat, profit after tax soared 140% quarter over quarter, jumping from 10 crores to 24 crores. So when you see these kinds of percentage jumps, especially in profitability, what's the first thing that, comes to your mind?
That's the million-dollar question, isn't it? Or maybe the multi-crore question here.
Right.
When I see profits surging like this, I mean, especially when it outpaces revenue growth so dramatically, it screams strong operational leverage.
Okay, explain that a bit more. Operational leverage.
It basically means they're getting more efficient as they grow, maybe making better use of their existing resources, their people, their tech, or perhaps focusing on higher margin projects or clients. Essentially, each new dollar or rupee of revenue is contributing more profit to the bottom line. It's a fantastic sign of underlying business health and scalability.
Got it.
And just a reminder for everyone listening, particularly maybe our international listeners, these figures we're throwing around 24 crores, 124 crores. They're in Indian rupee crores. A crore is 10 million rupees. So these are substantial amounts we're discussing.
Right. Good point. So digging a bit deeper into how they pulled this off, Avinash Sethi, he's one of InfoBeans' co-founders. He attributed the revenue growth simply to strong demand across all their geographies, so broad-based growth.
Okay, that's good to hear. Not just one region carrying the load.
Exactly. But the real, maybe secret sauce for those improved EBITDA and PAT margins, he pointed directly to extensive cost optimization efforts.
Ah, okay. So it's a combination, growing the top line while actively managing the costs. That makes sense.
It does. Now, about that nuance you mentioned, the numbers need a little context.
Right, the employee retention credit.
Yes. That total consolidated revenue of 124 crores for the quarter, it actually includes 6 crores from this ERC, the Employee Retention Credit. It's from the U.S. government.
Okay, so a pandemic-era thing they filed for a while back?
Precisely. Filed back in 2022. And it's accounted for under other income. So if you strip that out, their consolidated EBITDA was still, as we said, a very strong 30 crores.
Got it. So the underlying operational performance is still captured by that 30 crore figure, which is what drove that 89% year-over-year margin boost we talked about. Good clarification.
Yeah, important to see the core performance. Operationally, beyond the financials, they had some clear wins this quarter too.
Like what?
InfoBeans signed 6 new clients, and importantly, 3 of those were large enterprise clients. Significant wins.
Okay, landing big fish. That aligns with the growth strategy, I imagine.
Seems like it. They also brought on 67 new team members. So their total headcount is now over 1,450 people.
Wow, still hiring at a decent clip.
Yeah, and they're clearly reinforcing that ongoing investment in sales, in these high-growth teams, and maintaining that focus on bagging large enterprise clients. Another thing that really jumped out at me is their client relationships.
Mm-hmm.
They boast an average client partnership duration of over 9 years. 9 years average.
That's remarkably sticky, especially in IT services.
Isn't it? And an impressive 90% client renewal rate. What does that level of client loyalty tell you about their business?
It tells me they've built something incredibly stable and valuable. It's one thing to win new business, but keeping clients happy and engaged for, on average, nearly a decade. That's huge. It speaks volumes about the quality of their work, their relationships, their ability to adapt with the client. They're not just vendors, they're partners.
Right.
And this mix, aggressively pursuing new logos, especially large ones, while maintaining these deep, long-term relationships and that high renewal rate, it's really a testament to their service quality. They become embedded.
Yeah, indispensable.
Exactly. And when you look at the kinds of clients they mention, multinational banking, a 172-year-old legal content publisher, cloud data services, German tech conglomerates, these aren't small players. They're building trust in complex, high-stakes industries.
Definitely.
So this raises a really interesting question for me. What strategic moves are underpinning this? What's supporting this trajectory beyond just the day-to-day operational wins?
That's a perfect segue, because on the strategic front, there was a significant announcement. Their board approved forming a brand new subsidiary just recently, July 22nd.
Okay, new subsidiary. What's it called? What's it for?
It's called Ecoplex Infra Private Limited, and its stated purpose. It's for a green IT park project, and it's classified under the construction industry.
Huh, a green IT park. Construction.
Yeah.
That's not immediately obvious for a software engineering company. Interesting.
Right. InfoBeans will subscribe to 76% of its paid-up capital. It's a relatively small initial amount, 76,000 rupees for 7,600 shares. They did note it will be a related party transaction, but importantly done at arm's length.
Meaning the terms are fair market value, as if between unrelated parties. Standard practice for transparency. And this needs regulatory approval, I assume.
Yes, subject to Ministry of Corporate Affairs approval. So what's your read on this? An AI-led software company investing in a green IT park via a construction subsidiary. Diversification. Something else.
It's definitely fascinating. It signals a few possibilities. I mean, sure, it could be simple diversification into physical infrastructure, but it feels more likely linked to their core business somehow.
How so?
Well, think about it. They're growing fast. Headcount over 1,450. Maybe this is an investment in their own future campus. A dedicated, eco-friendly space designed for their kind of AI-led work that could help attract top talent, provide state-of-the-art facilities, and strongly align with ESG goals, environmental, social, governance. That's increasingly important.
Okay, so building their own sustainable home base, potentially.
Potentially. Or maybe they see a synergy, perhaps applying their own AI and software expertise to the actual construction or management of smart green buildings. It could be a showcase.
Interesting angle.
Either way, it looks like a long-term infrastructure bet. It suggests real confidence in their continued expansion and maybe a commitment to sustainability becoming part of their physical footprint.
That makes a lot of sense, connecting the dots like that. Beyond that big move, they're clearly focused on shareholder returns, too.
How are they doing that?
They just successfully finished a share buyback program in June, repurchased about 215,000 equity shares at 464 rupees per share, totaling 10 crores.
Okay, returning capital via buyback. And did the promoters participate? Sometimes that's a key signal.
That's a great point. And notably, InfoBeans' own promoters, the insiders, although they were eligible, they chose not to participate in this buyback.
Right, which often signals that they believe the shares are worth more, or at least worth holding on to. It's usually seen as a positive sign of confidence from management.
Exactly. And on top of the buyback, a dividend. Ray 1 per share was approved. Record date was July 25th.
So buyback and a dividend, covering both bases for shareholder returns.
Yep. And one more thing on the capital front, they also allotted about 86,500 equity shares during the quarter. This was from employees exercising their vested stock options, their ESOPs.
So employees are benefiting from the growth too, That increased their paid-up share capital slightly and the securities premium account by 277 lakhs or 2.77 crores.
Right. So like you said, it's not just about those impressive top and bottom line numbers. It's also about these strategic investments, like the potential IT park and directly rewarding shareholders and employees.
Exactly. These actions, the buyback suggesting undervaluation, the dividend showing commitment to returns, the ESOPs aligning employees, they all paint a picture of a management team that's confident. Confident in their current performance and, importantly, their future outlook. It's a well-rounded approach to capital management.
Absolutely. But, we've talked financials, strategy, but there's clearly a big emphasis here on culture, innovation, and social impact too.
Which is crucial in the tech space. Right?
Definitely. Get this. InfoBeans was recognized as a dream company to work for the 10th time.
10th time. That's consistency.
And Madhya Pradesh's Best Employer brand for the 7th time. How important is that kind of consistent workplace recognition in such a competitive market for talent?
Oh, it's incredibly important, maybe more now than ever. Attracting and keeping top tech talent is a fierce battle. These kinds of awards, they aren't just like vanity metrics on a shelf. They're powerful tools for recruitment and retention. They signal a positive culture, good leadership, that they care about employee well-being. And that translates directly into higher productivity, lower churn, which ultimately fuels the innovation and the client satisfaction we've been talking about. It speaks volumes about their human capital.
Makes sense. And their core identity, as they stated, is an AI-led data and engineering company. You really see that thread running through everything.
How so? Where does it show up?
Well, in their global service offerings, they're actively developing things like AI-powered ServiceNow, AI-optimized storage solutions, AI-enhanced Salesforce.
Embedding AI across their core service lines.
Exactly. And AI-led engineering, using GenAI and Microsoft Copilot.
Yeah.
Internally, they even ran an Ignite AI hackathon with over 100 participants.
So fostering internal innovation too, not just client work.
Seems like it. And they've been very visible at major industry events, Knowledge 25, Salesforce World Tour in Dubai, the Databricks Data Plus AI Summit. It signals they're serious about staying right at the cutting edge.
Yeah, you have to be in that space. Constant learning, constant evolution.
And then there's the ESG and CSR side, environmental, social governance, and corporate social responsibility. It seems really ingrained.
What are some examples there?
Their InfoBeans Foundation, that's their CSR arm, it was recognized for the most impactful employment generation initiative. They just held the 10th graduation ceremony for their free one-year training programs for underprivileged youth.
Wow, that's significant. Real impact there.
It sounds like it. Environmentally, smaller things, but culturally important. Maybe they planted 332 trees for team member birthdays. They celebrated an environment month in June with things like a no elevator day and carpooling day.
Building awareness and engagement.
Okay. And they've racked up key certifications too. ISO 9001 for quality management across all locations. Plus, for their Banner and Chennai offices, they've added ISO 27001 for information security.
Critical in their line of work.
ISO 14001 for environmental management and ISO 45701 for occupational health and safety.
So, formalizing those commitments to security, environment, and safety, that builds trust with enterprise clients too.
Good point. And one more, they're fostering women leaders. They just launched the second batch of their Shakti Women Leadership Development Program.
That's great to see as well.
It really feels like their motto, creating WRW, isn't just, marketing fluff for clients. It seems to apply internally to society, to their employees too.
Absolutely. And if you connect all that back to the bigger picture, the financials, the strategy, it suggests a genuinely holistic approach to business. Financial success isn't separate from these things. It seems intertwined with having a strong culture, driving continuous AI innovation, and maintaining this meaningful social and environmental footprint.
Right.
That combination often builds serious long-term resilience. It attracts and keeps the best people, fosters deep client loyalty, keeps them ahead technologically, and frankly, meets the evolving expectations of all stakeholders, investors, employees, customers, society. It also helps manage risk and build a really strong brand.
That's a great synthesis. Okay, just to quickly ground us in the market context as of June 30th, 2025.
Yeah, the market snapshot.
InfoBeans had 242.39 lakhs equity shares outstanding. Their trailing 12 months EPS, earnings per share, stood at 21.98. Market price on that date was 379.15 per share, which gives them a market cap of about 919 crores.
Okay, approaching that 1,000 crore mark.
Yep. And a trailing price to earnings ratio, the PE multiple, of 17.24.
Relatively modest PE given the growth rates we discussed, actually. Interesting.
It is. And just a calendar note for those tracking closely, their 15th annual general meeting is coming up soon, August 4th, 2025. So, to sort of wrap up this deep dive, InfoBeans' first quarter for fiscal 26 really showed, well, significant financial acceleration.
Definitely. Driven by that strong demand and, crucially, smart cost optimization.
Right, and that growth isn't happening in a vacuum. It's backed by strategic moves like the Green IT Park investment, thoughtful shareholder returns via buybacks and dividends.
And underpinned by this deep commitment to innovation, particularly in AI, their people, their culture, and that broader social responsibility piece.
Exactly. Any final thoughts on what listeners should really take away from InfoBeans' performance this quarter?
I think, for me, the key takeaway is that while those headline numbers, the 200% profit growth, are undeniably impressive, the real story is how they seem to be integrating everything. It's the financial strength combined with a proactive strategy for the future, the IT park, the AI focus, plus the social impact, the talent management. It's not just about what they earn, but how they earn it and how they're reinvesting those earnings across the board to strengthen their position for the long haul.
Well said. Understanding all those diverse aspects really does give you a much richer insight than just looking at the headline numbers alone. So, what does this all mean for you, the learner? Well, perhaps it's a reminder that being truly well-informed isn't just knowing the numbers. It's about understanding the intricate story behind them. How growth in cutting-edge AI tech can somehow connect to a strategic investment in something seemingly different, like a green IT park.
Looking for those connections.
Exactly. What other surprising connections might you uncover by looking beyond the obvious in your own deep dives into the businesses shaping our world? Something to think about.